Okay, we are live and recording here. The beautiful Chicago offices here at Prosper Trading. Okay, so the question had come up, and there might have been a video out there at some point. I know that there is text out there on the campus, but I wanted to make a video and go over the main type of trades that we're looking at in the scalping sort of trades that we are looking for, day trading methodologies for the short-term options. So there are essentially two main methodologies that we use. One we'll refer to as the crossover scalp. For those of you that are in Charlie's penny stocks room, you will be familiar somewhat. We don't do everything exactly the same, but the same underlying premise will be there. And then there's also something that is what we use here in the gap entry, which is different than Charlie. So be careful that a gap bar entry is different than a gap entry. But in here we will do gap bar entries, but it's not the same thing. Okay, so the first thing that we do when the markets are more active, I'm looking at a 5-minute chart. Or excuse me, I'm looking at a 3-minute chart. When they slow down, I go to a 5-minute chart just because, I don't want to get a lot of indication of noise, so to speak. So right now, it being 10:30 in the morning here in Chicago, we're on a 5-minute chart. The first thing that we are looking for, is in here where we see this watch list. And I just named this watch list the usual suspects. That's just these are about the 80 or so stocks that we follow for day trading methodologies. Very liquid, very low bid ask. You can see here, you see the vowel alarm. When it's 0, that means that there is no unusual volume. When we get to a 1, that means, so now that I clicked on Western Digital WDC, what we're looking at here is this middle chart. So these bars here are volume numbers on the 5-minute break. So you can see it goes from 9:45 to 9:50 to 9:55. Okay, and then this yellow line here is the 50 period moving average. So this takes the average of the last 55-minute bars. So if the volume is higher than the average, if the volume for the bar is higher than the average, that's going to throw out a 1. This is just a simple piece of code we put together. So we can see that these bars are higher, and so this is saying, because any move that happens with no volume really is of no consequence to me. Because as easily as it went up, it can come right back down and vice versa. But when things happen in volume, that means that there's market participation, which means a more solid footing to be making your assumptions on. So if there is not a 1 here, I'm not even looking at this. So there's really, we just saw Baba creep in here. And as you get further into the 5-minute slices, you'll get more of these 1s, because every time that we switch from the 10:30 to the 10:35, it's going to have to reset its volume. Okay, so that gets us to look here, or gets us to look over at the actual chart. Let's stay on Western Digital. Then, once we find that there is some volume, then my eye, I don't even look at the chart here. My eye goes directly to these two momentum indicators. You don't need to know the math behind them. There is some explanation on the campus that I talked about for that, but this is called the polarized fractal efficiency. You'll hear me refer to it as the PFE. That is an indication of momentum, and then this DMI stochastic is also an indicator of momentum. And so what you're looking for these to be in concert, meaning if this one is going up like it is and this one is going down like it is, that's not good. That means that it's probably a false flag, and probably most likely you're going to be stuck in a kind of a range here. Okay, so technically, for it to be bullish, the PFE needs to be above 50. I like to see it certainly above 70. It's strongest if it's 100. And then to the downside, you want it to be negative, like it is now. Right now, it is what is it now? So it's negative 65. So if it's below negative 50, well, then that's bearish. And obviously, the stronger the bigger the magnitude of that negative number, the more bearish it is. So that can go all the way to minus 100, minus 100 to plus 100. The DMI goes from 0 to 100. So anything below 10 is bearish. Anything above 80 is bullish. Now sometimes you have to jump that and say, well, I got a very strong PFE and this is trending that way. I mean, if you wait for all the stars to align every single time, that's going to be difficult. So right now, I wouldn't even go and look at the chart here. This is up, this is down, I don't care about it. We just rolled into the 1036 bar, or the 1035 bar, and so we are seeing this slowdown. We're not seeing any volume here. I wanted to see if we can find another example. But for right now, so I mean, ideally, if you wanted something bearish, or at least to go look at the chart to see if it's bearish, would be going down, this would be going down, but it's not. Okay, let's pretend that they were. Let's pretend that the DMI was pointing down. So then what you're looking for, let's look at the different elements of this chart. Okay, the solid, thick purple line is the VWAP, volume weighted at price. So this is the average price weighted for volume of the session today. When it's below the VWAP, that means the sellers are in charge, which is there's momentum to the downside. If we're above the VWAP, that means that the buyers are in charge and there's momentum to the upside. Okay, this pink line, we'll call it pink line here and yellow line here, these are +2 and -2 standard deviations away from this VWAP. It acts as short-term resistance, as you can see here. So you start getting way above the +2 SD, it's very difficult for it to keep moving that way very quickly. And of course, to the downside, if we're way below, you don't want to do that. The thin purple line is the 7-period moving average, and the dotted blue line here is the 20-point moving average. So what we're looking for here in the case of a down move, we're looking for a crossover of the 7-period from above to below the 20-period. So in this case, at this point we had volume. We've moved into the other bar and it slowed down. But let's pretend that we had volume. Let's pretend that the DMI was pointing down. Well, then you have this pointing down. If theoretically this was pointing down, we're below the VWAP and we had the crossover. That would tell you that would say, hey, this is a candidate for a bearish play. This yellow line is the whole moving average, which is it's a smoothing exponential time-weighted moving average, and you definitely want this to be in the same direction that you're trading. So if you had all these things setting up, but yet the hull was pointing with a positive slope, that would say, hey, listen, the tide is turning here. And I wish we could say that this is the exact recipe, A equals B equals C. You kind of and I try and talk about this, where the subtleties are. The subtleties for me here is, well, the DMI is obviously going up. These arrows indicate reversal. So when we got the red arrow here, this was saying, hey, this thing is turning down, and it took 10 minutes for that to happen, but it certainly happened. Here we have the green arrow pointing up, which I would expect that we're going back up. Now that doesn't mean that we buy it here. The stars kind of have to align. Okay, and so let's see if we got something. Here's the Russell. So here's an example of the Russell. Okay, we got the volume. PFE is almost below 50. Right now it is -47, so it's not quite bearish yet. This is below 10, so it is bearish. Well, now we go and look here. Well, what happened here? Well, we had the crossover back here. We are below the VWAP. and the hull is moving down, and the 7 period is moving down. So this is bearish, but then you have to take into context. Look at the range. I mean, this is telling me this is very range bound. That, you know, it looks like until kind of the tides change, we're going to be bouncing around this area. Now, that doesn't mean you can't play it. It's not the strongest thing in the world. There's not a really strong trend here. This looks like just bouncing around the VWAP and people just kind of trading that small range. Okay? Okay, any questions on that? And then we'll go over what the gap is. The gap is much simpler. If there are no questions, let's look at the gaps. Okay, so this is another thing that I went out there and did. Little piece, I call it gap percentage. What I do is I take the same names that are in our major watch list, and I say, hey, I want you to track the close of yesterday to the open of today and tell me what that percentage move is. So in this case, Alcoa opened up 2.69% lower than it closed yesterday. So what I'm looking for moves that are 1.5% or lower in the case of a bearish move, or 1 in the case and higher in the case of a bullish move. It turned out today that none of these gapped up more than 1.5%. So that just means that we don't have that. So then what are we looking for when we get to that? Let me get that off the screen. And so I'll just pull in a different chart here, simpler chart. So here we are with Alcoa. So what we're looking at, we want to look at the first 2 bars of the day. So in the case of a 5-minute chart, that's the first 10 minutes of the day. So we got the gap move, and the top of that gap is where I'm going to call where the gap trigger, which means that if we, after the first 2 bars, I want to take the highest move of that. If we get into this area, that tends to be a bullish signal. The market likes to fill that gap if it gets through it. Now, sometimes it gets into the gap and pulls back, but we also know that if that happens, we have a quick stop to get out. So again, high reward, low risk. The other one that we had today was Gap stores, ironically. Same thing. Now, Gap opened here, then opened here, traded up, closed here, opened up here, and has traded lower basically kind of all day, and here we are. So we would need to get up through here, and then we just manage the signal, you know, by moving our stops, or if we get into here, well, then we would just buy an at the money call and just move our stops up until we felt that the move was exhausted. And we can use our other chart to track that progress as well. All right, so I mean, that one is pretty simple. So any questions on that? That's basically. And Dale, you said that your DMI only has 10, 3, 3, and 90, doesn't have the other 10. I can't really speak to that. I don't know how your platform in Thinkorswim and what we use here. These are the parameters that we use. So you're gonna see that. You know, you're not, if you don't have the exact same platform as me, you're not going to be able to replicate this exactly. You could probably approximate it, but you're not going to be able to do it exactly. All right, so we've really slowed down here. So let's see. Work. So here, we know that we got volume. DMI pointed straight down. PFE trading 90. That tells me that there's nothing here. And look at this. Looks like there's nothing here. What about MDB? Okay, down, down. So that's good. We had the bearish crossover. We're below the VWAP. But, so this is definitely bearish. But do we really want to, theoretically, this yellow line, that's the minus 2 SD around that VWAP, do we want to initiate a short here? Ideally, if we were trading here and we had this kind of setup, we'd be looking to short it. But here, you know, we're talking, you know, a very small range that we're trying to capture. I wouldn't take that. ABBV, down, down, good. So this is better So, we would be looking at something, opening in this area for a possible move down. We just moved into the 45 bar. So, like I said, I wish there was a way to say, well, if A, B, and C, you have to take things in context. But these are the guides that get us into the areas that we want to get into. All right, so that's really about it. I mean, it's fairly straightforward, but to say, it's simple, but it's not easy. There are there you have to, there is a little bit of finesse in there by, hey, I don't know what what was that quote from like the 60s with the FCC? I don't know what pornography is. I can't define it, but I know it when I see it. That it's that sort of thing. You take things in the context of moves. So I mean, this is looking pretty bearish in ABBV, but like I said, it's also pretty slow. But I certainly wouldn't be buying it. It's something I'm looking for a sell. And then how do you manage your stops? Ideally, you'd like to have your, if you could get a short where there's obvious resistance here from the 7 and from the VWAP, that would be something great. Well, if you're going to wait for that perfect thing, you're going to not trade very often. So, maybe we say, well, shorting it here is not bad because, maybe I stop myself out a little bit above this bar or something like that. But, again, it's not random, but it's subjective. Okay, so I did record this. I will get this video out to you as soon as it renders, and I'll probably put something together for the blog today, so you have that too. Okay, so hopefully this is helpful. Review it. Obviously, I expect you to have questions. You're not going to be able to be all over this on the first day, but repetition, and things start to look like a duck and sound like a duck, and quack like a duck. They tend to be a duck. Okay, I'm going to turn off that, and if anything comes up, let me know. Thank you very much.